It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to help you if you have any questions about your return, about an old return, about whether you should take money out of your pension plan, anything like that, anything tax related. And so much of your money is tax related. And we're here to help you. Our phone number here in studio is 803-0930, 803-0930, star 930 on your cell phone. I know you're all snuggled up in your home with your fleecy jammies on, sitting by the fireplace with a cup of hot cocoa. What a better time to talk taxes with Esther Gulius from EG Tax and Tiffany Fabian. Hey, Tiff.
Hey there, Esther. I would love to be snuggled up at home next to my fireplace.
Speedy pajamas.
That sounds like a plan.
With a flap in the back.
But I'm doing taxes today.
That's right. We're going to go back to the office, and our office is open tonight until the last client leaves, I think. That's what we have. And then next week, we're going to be open 9 to 9, Monday through Saturday.
That's right.
Everybody should have their W-2s and start.
And then the malls, there's two malls that are open on Sundays, too. That's the McKinley Mall and the Niagara Factory Outlet Mall.
Right. So you can go up there if you
so
need
inclined.
your taxes done on Sunday. We can accommodate you with that. If you're having trouble getting answers, you can go to our website at egtax.com, ask the tax lady, and you can text me your questions. I will text you right back and give you as best as an answer I can. Sometimes the questions are so long, I'd have to like hire a transcriber to type, to call you. So it might be easier just call us at 632-7886 as well. But right here today, 803-0930, 803-0930, star 930 on a cell phone, and we want to talk about taxes. I thought, I kind of going to go through a little series here.
And I just wanted to say Monday was the first day a couple of days ago that you could start sending returns to the IRS and New York State, and we have done so.
I think everybody knows that the IRS is holding up refunds.
Yep.
Primarily if you have children and all of these credits.
Right.
All right? Most people, but you'll notice, especially if you're our client, we're putting on your driver's license as a secondary form of ID. Then we attest to the fact that you're really here, because there's so much identity theft and tax fraud for people filing bogus tax returns. This is a way that the IRS can know that you're legitimate. You're the legitimate.
I just listened to a video from the IRS that they put out, because they put out all these videos, and it said that they're by law, if you have EIC or additional child tax credit, they have to hold up your refund of February 15th. But they said do not file your return later, because they want to start the process.
Right. They're processing them now.
Right. They said
they
don't
won't release the funds till after the 15th.
But they urged people to start filing right away.
Wow, we got a whole bank of calls. But if we run out of callers, which I don't think we are, I wanted to talk about what is the tax bracket and what tax bracket are you in. And I think it's so important when you think about all these potential tax law changes that are going to come down the pike, that you would know about how your taxes are done. So many people have no idea how a tax return is put together, what a tax bracket is, where, what's taxable, what's deductible. So we're going to talk about that.
And especially with the new administration, they are talking about lowering taxes.
And they're talking about getting rid of some itemized deductions.
Right.
And I thought it would be important for people to understand that. But let's first go to the phones and talk to Art from Tonawanda. Hey, Mr. Art, how can we help you, sir?
Hi, how you doing?
Good.
I'm a non-custodial parent.
Okay.
My daughter graduated high school in 2015.
Okay.
And I thought that I could claim her still as a dependent, as a non-custodial parent. She worked part-time until November of 2016.
Okay, Art, how old is she now? Well, how old was she in 16?
She's 18 years old.
All right, so she's 18 years old.
Yes.
And do you have an 8332 signed by the custodial parent?
Yes, I do.
All right, and it lets you claim without restriction your daughter, correct?
Yes.
All right. As long as your daughter's under the age of 19 in 2016, and she did not give more than 50% to her own support, then you can claim her as a dependent
For 16.
for 16.
And she won't have trouble claiming herself also?
She can't claim herself, Art. You claim her, and when she does her return, she doesn't claim herself, but she still gets the standard deduction. All right?
Yes.
So if she made, let's say, $3,000, she's going to get all of her money back because her standard deduction is her wages up to $6,000. And on the state of New York, it's a $3,000 standard deduction. So she won't be hurt. Now, let's say in the state of New York, she owes $50. You because you got the benefit on the state and the federal for her, you should pay her liability on the state. But on the federal, she should have no problem unless she made more than $6,000.
Okay. Thank you very much.
You're very welcome, Art.
Bye.
Bye-bye. Let's see. And parents really don't know what to do. Now they got the working.
Right.
So the kids file their own return, but the kid doesn't claim their
Personal exemption.
The parent does.
Right.
Once a child turns 19, though, then a child must be a full-time student or make less than $40.50 a year in order to claim it.
So, and that rule is there until they reach the age of 24. If they're in school.
Up to 24
Yep.
if they're full-time students.
Right.
Okay, let's see. We got Jack in Lockport. Hey, Mr. Jack.
Good afternoon.
Hi, how can we help you?
I have several questions, all related to IRA. I'm going to reach 70 and a half years of age this year.
Okay.
What
month, Jack, will you turn 70 and a half?
What month?
Yeah.
Oh, in February.
Okay.
Okay. Am I still allowed to make a contribution before I reach 70 and a half?
No, it's in the year that you turn 70 and a half where you can no longer make a traditional IRA contribution. However, you can do a Roth contribution as long as you have wages.
Still do Roth.
Right.
Okay.
Okay?
And then don't forget, you got to start doing your RMD soon too,
Right.
Jack.
So in 2017, you have to start doing your RMD unless you push it off up till April of 2018 and do a second RMD that same year in 2018.
Okay, and I realize that, and I'm wondering how long after I'm 70 and a half do I have to do it, or do I have it until the end of the year?
You have till the end of the year. Well, you're going to have till April of next year. April 1st of next year.
Okay, and then the last thing, I was under the assumption that if you make a direct contribution from your IRA to a charity, you do not have to claim that as income, even if you do not. What do I want to say?
You're right. Everything you're saying
All right,
is right.
Let me explain.
Okay.
If you do a rollover from your IRA to a charity, direct rollover up to $100,000, that'll cover the RMD, and it is an income or deductible on your tax return.
Okay, even though I don't itemize.
That's correct.
Okay.
Okay?
All right, well, thank you so much.
You're very welcome. Thanks for listening. Okay, let's go to Pat. And 8030930, 8030930, star 930 on your cell phone. We got Pat and Elma. Hi, Pat.
Hello.
What's happening?
Hi. My wife collects long-term disability insurance.
Okay.
Because she's disabled now.
Okay.
And she gets a W-2 form from that insurance company. Do we have to claim that on our taxes?
Yes, you do.
Okay.
Now, let me ask you this, Pat.
Okay.
Besides your wife's long-term disability, is there any other source of income you guys have?
Yes, she collects Social Security and my income also.
And you're a working gentleman?
Yes, I am.
Okay.
How much do you make a year approximately, Pat?
Together or just me?
Just you.
80,000.
Okay, I was thinking maybe you got earned income credits.
Tiff and I were both sniffing down the same
But
hole.
no.
But yeah, you don't get it. But your wife's disability payments on the W-2, if there's something in box 1, 3, and 5, is taxable. Yeah.
Well, see, that there isn't. There is nothing on 1, 3, and 5. The only thing is in box.
In box 12?
12.
Okay, you're good. Then it's not taxable.
Okay, now
Yay.
the thing is because the last 2 years we filed it, the W-2, and the federal government says we have to mail our return?
Because it doesn't match, because they show nothing in box 1. So they've probably been doing a wrong return and including that income when they don't have to.
No, you haven't been including that income, have you, Pat?
Excuse me?
You haven't been including the income on your tax return, right?
Yeah, the disability insurance, yes, we have.
Oh, no, you should
Amend
amend
it.
those returns. You have money coming back.
Oh, really?
And
Oh,
that's
yeah.
why the IRS is making you mail it in, because
they
it's
don't
not.
understand what's wrong with you. I'm only kidding.
The last 2 years we're entitled to money back?
Yes, sir.
Okay.
Yeah, so come on down, see Auntie Esther. We'll take care of you. We'll fix up your tax return.
I think we will.
All right.
Thank you very much.
You're welcome, sir. Bye-bye.
Okay.
You know, and if, I guess I got to take a break. I would go on and on. I love talking about taxes. 8030930, 8030930, star 930 on the cell phone. We're going to take a short break, and we'll see you on the other side.
Just like the one-winged dove sings a song, sounds like she's singing.
This is Stevie Nicks.
Hey, I know that. I like, Frank, I like them peppy songs. I'm dancing on top of the desktop here. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I like it. What you do, Frank, though, that one of the other guys that used to, who I love to death, he used to play things like Stairway from the Basement and Drum Roll from the Orange Pit. I mean, he used to have all these weird things, but at least we know
Tyler
Stamer. We used to love Tyler too. So you just did, Frank. All right, I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, and I'm going to go to Helen. Hey, Miss Helen, how can we help you?
Hi. We have a grandson, which his mom died about 8 years ago.
Okay.
We raising him right now,
Okay.
and he is on SSI. So
Okay.
we have to claim him. We never did.
Okay. How old is he, Helen?
At 13,
He's 13. And how much do you get in SSI for him?
380.
A month?
Yes, and we are retired.
Okay, so you're getting about $4,000 for him, right? About a little under, or about $4,200. So let me just ask you a couple questions. How much do you think your house is worth, Helen?
My house?
Yeah,
I don't know, about 200.
200,000. All right. So if I was going to move in this afternoon, and now you didn't know me from Adam, and I kicked you out, all of your furniture, staying, and everything, how much do you think you'd ask rent for it? Maybe a couple thousand a month?
Yeah.
Okay. And how much is your food bill every week?
Oh gosh, about 70. I don't even know.
Oh, okay. So you $70 for the three of you?
Yeah.
Okay. And your utility bills, they run $200-300 a month too?
Oh yes. Oh yes.
Okay. So
And we pay our taxes at 10,000.
okay. So what you have to do in order to claim your grandson is you have to furnish over 50% of his total support. And based on the few things that you said to me, you do furnish over 50% of his total support. So, yes, you can claim him on your tax return, and you should amend the last 3 years' returns and get your money back. And because he's your grandson and he's under the age of 17, you're going to get a $1,000 child tax credit. If any of you are you and your husband working?
No, we are retired.
Okay, then you won't get the child tax credit. But anyway, but you'll get the child
not
tax
the
credit,
earned income.
but you won't get the refundable child tax
Right,
credit.
right. They
So,
wouldn't qualify. Yes,
so it looks like you have you've been filing returns, Helen?
Yes, we did, but we never claimed him.
Yeah, well, you should claim them and go back and amend the last 3 years.
And there's also credit on New
On the
York
state,
State,
too.
too.
Yeah.
There's the Empire State child tax credit, so you should really
I'm
amend those
assuming,
returns.
if you guys have liability, it should be about $2,000 that you have coming back per year.
Oh, really?
Yep.
And then someday when he's in college, which will be here before you
Yep.
know it, you'll get the college
AOTC
credit too.
Credit too. Yep. So if you need help, Ellen, we're here.
Okay.
Okay, dear?
One more question.
Yeah.
We had his sister. She got married, but we never did claim her either.
Now, how old is she?
She's 21 now.
Okay, was
But-
she in college?
No.
All right. So,
This year.
okay, so how long ago since she lived with you?
She, a year ago, she stopped living with us.
Okay, but she was working, right?
She was working a year before that.
Okay, so here's the thing. Once she turned 19, if she made more than $4,050, actually back then it was $4,000, you couldn't claim her anymore unless she was a full-time college student.
Helen, did she go to college in 13?
No.
No, she didn't go to college. So you couldn't claim the granddaughter, but you can claim the grandson.
Okay.
Okay?
All right then.
Thank you, dear. Thanks for calling. Bye-bye. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we'll go to Steve in Tonawanda. Hey, Steve.
Hello.
Hi, Steve. What's new?
Hi. My question is, I usually did the standard deduction, but
Sure.
last year I had gambling winnings that
Okay.
a lot of people run into. So, that's the only reason why I'm doing that. No, but the question is not about gambling. It's about line 39A where it says you can get a extra exemption if you're over 65.
Okay.
But it's not clear. It says see instructions.
Okay. How old are you?
I'm 66, 67 this year, so I'm over the age. But I don't see how that works. I mean, you check one. Actually, I don't have the instructions for this year. I was looking at last year's. I was hoping maybe they'd be the same. But how does it? I mean, it's not an automatic.
All right.
Is it?
Okay. So the standard deduction. You're talking about the standard deduction. Are you single or married?
I'm single.
Okay, so if you're over the age of 65 and you're not blind, the increased standard deduction is $1,550.
But can I take standard deduction if I?
Not if you're going to itemize.
How much were your gambling winnings this year?
My question: don't I have to itemize because I?
Oh no. So here's the thing. Let's say that your you said your standard deduction would be $6,300 plus
$1,550.
So your standard deduction
Is
gonna be
$78.50.
All right. So how much was your gambling winnings?
$7,500.
Okay. So you're gambling, and you own a home?
Yes, I do.
All right. How much are your property taxes?
Roughly $3,000 a year.
And did you buy a car this year?
No.
All right. So you got the sales tax deduction. I don't know.
Are your losses the same as your winnings, Steve?
Yes. Yeah.
Okay.
So your itemized deductions are without your charities, and your itemized deductions are going to be about $10,000. So you would take the $10,000 over the $7,850 because that would save you more money.
So you are going to
You're gonna
itemize.
Okay, but what are you saying then about that?
You have to leave. You have to leave the additional
You don't
loan.
get the extra standard deduction for being over 65 if you itemize. So you just get no benefit for being over 65 when you itemize.
Well, okay, and are you saying though I wouldn't have to do that?
Well, okay. So here's the deal. You either let's just say that if you're itemizing, you'll get a $10,000 write-off. If you don't itemize, you'll have a $7,800 write-off. Which is bigger? Which is bigger, $10,000 or $7,800?
Oh, $10,000.
Mm-hmm.
So what are you going to do? You're going to itemize, right?
Itemize.
You take either or.
Okay.
That's it.
That's it. Otherwise, it would have been just what you say, 63 plus.
It would be $7,850.
Oh, 78.50.
Or it's going to be over 10,000, but look, we're using 10,000 as a benchmark here. So you're going to definitely save money by itemizing.
Yep.
So let's just put it real simple here. Let's say that you end up with itemized deductions that are over by $4,000 over your standard deduction, and you're in the 15% bracket. You're going to save $600 if you itemize. So it's up to you. You want to pay more taxes, then don't itemize.
Well, like last year, I only had I did have a gambling winning of $2,100. I might have been able to put that on there and still taken the standard.
No, if you take the standard, then you can't. Then you're not going to get any itemized deductions for gambling. You don't net it on line 21. You put in all your gambling on line 21, and as a miscellaneous itemized deduction, not subject to 2%, you take the losses up to the income if you lost that much.
When I said last year, I meant 15. And
Yeah.
I didn't see how to take that extra exemption because I thought, indeed, you have to itemize when you want to do the gambling winnings, and then
You do have to itemize if it's bigger than the standard deduction.
Okay. All right.
All right?
Very much.
Thank you, sir. I know it sounds like Sanskrit. When you read the tax law, it seems like Sanskrit, but to us it's fun.
Right. So
You know?
the bottom line is he won't get to use the extra for being over 65 because what the better answer is for him to itemize this year. So he doesn't get to use the extra this year.
Okay, let's go quickly to Monty. Hey, Monty, can you ask this quick before news?
Yes, I can, Esther. The business my wife worked for closed at the end of 16. She has not yet received the W-2.
All right, you think they're going to, did they go bankrupt?
No, they just closed up on their own.
Okay, so is there no hide or hair of them?
No, we know them. We see them,
Okay, so if they don't produce a W-2, you wait till the middle of February, and you can do a substitute wage and tax statement if she knows what she made and what the withholdings were, and they'll take that. But they really have till the 31st to get it out to you.
31st. Okay.
Okay.
Esther, thank you.
Thank you, sir. I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break for news. We'll be back on the other side. 8030930, 8030930, star 930 on your cell phone. See you on the other side. I know.
Oh, Stairway.
This is Stairway to Heaven. Am I right? Now, who did Stairway to Heaven? Led Zeppelin. I like these.
Get
kind
the
of
lead out. Hey, I wanted to say while we're listening to the intro, what Monty said is really important. There's a lot of people out there who won't get their W-2s until past January 31st. And so, like Esther said, I just want to paraphrase. If you don't get your W-2 and you still haven't gotten it, and it's February 15th, if you know how much you made, you can do a substitute wage and earning statement. So there is hope for you.
Right.
If you don't have it.
Okay, so, all right, let's put that Led Zeppelin back up.
It was a great
laughter. I love Led Zeppelin. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. We want to help you, and we want to help you. Look at when I give you some stuff here, and you don't want to go to EG Tax, that's okay. Just go to somebody who knows what the heck they're doing, and it's usually not Aunt Thelma on the kitchen table, okay? Unless she's cooking dinner.
I did a tax return for a young lady who's an accounting student, and her dad brought her in, and she says, "Oh, but no, I can do my own tax return." So her answer was $1,028. When I did it, her answer was $2,300, and he said, "See, I told you."
No, it's true, and I mean, people, they'll save $90 in tax prep. They might cost themselves $2,000 or $3,000 or $5,000 or $8,000, but because it's complicated, and we want to help you. Let's see. Let's go back to the phones, and we'll talk to Deb. Hey, Deb, how can we help you?
Hi, I have a question. I'm on Social Security disability with First Comp.
Okay.
And I also receive rent through social services at $169 a month. An adult child living with me.
Mm-hmm.
And who's on social services, and I really can't afford them. And with my health care coverage being over $1,296 a year, and my private insurance, because I don't qualify for the Medicare, I'm underage.
Wait. No,
Medicaid.
Your income is so low,
Medicaid.
You should qualify for Medicaid.
I don't.
How?
I don't, and I pay for like a subsidy health insurance at $1,000.
Okay, how much is your workers' comp?
My workers' comp is $289 a week.
Okay, so that's $15,000. And how much?
$90 a month.
And $90 a month for who? For Social Security?
$890.
$890. Yeah, so you wouldn't.
How about
Medicaid.
the essential plan? How about the essential plan?
How about the essential plan? Have you looked in the essential plan, Debbie?
I never heard of it.
Okay, you know what? We have 2 health navigators that are in our corporate headquarters, and they are certified health navigators from New York State, and we don't charge to help you. So if you want to call my main office and ask for Karen O'Brien or Tim Eliason, they're going to tell you about other things that are available for you, okay?
The essential plan is like $20
A month. Yeah.
Am I supposed to be even filing taxes?
No, you don't have to file
She could
taxes.
maybe get the renter's credit if you don't live in a subsidized housing unit.
I think she does.
I live in a small single house.
Are you getting Section 8?
No.
Is the rent more than $450?
No, it's $168.
$169.
Yeah, well, but her income's 20-some thousand, so she'd be eliminated. Yeah, so call 632-7886, Debbie, and ask for Karen or Tim so that they can, and ask about the essential plan, okay?
I have it written down.
Okay, hon. Thank you. Bye-bye. And let's see, I'm going to go to Fred. Hey, Fred. Mr. Fred, how can we help you, sir?
Hello, Esther. Question for you. For the last few years, me and my wife have been filing jointly. I have an IRS issue attached to the business that I own, and it's also personal. And I don't want it to hold up my wife, my wife's portion of the
refund
return, because she makes more than me.
Okay.
And so my question is, can I file married filing separately?
Sure, that's always in your wheelhouse. You can always file married separately, but it may cost you more taxes. Tell me, do you have children?
You know what? My children are older, 20 and 21. They don't live with me.
Okay, so you don't have any children in your home, correct?
There are, yeah. I actually, my wife's children are in the home, so she
So, all right, well, wait, hang on for a sec. How old are her children?
Well, the one turned 18 in November.
Uh-huh.
And stepson's 15. He'll be 16 in March.
Okay, well, so this is one of the things that you guys have to think about. What you might want to do is you have to do your tax return both ways in order to find out which is better. If you file married joint, take a look at what the refund's going to be jointly. File married separately and see what the collective refunds are if you net everything, yours and hers. Because she can always file as an injured spouse, and they will not take her portion of the refund. So if there's any benefit, and there usually is when you're married filing joint with children, if there's any benefit for her to file married jointly with the injured spouse, they're just going to process it, peel off your portion, which you're going to have to pay anyway, but she'd then get the benefit of filing jointly.
Well, the way I looked at it right now, she gets the tax credit for my stepson who's under 17.
Mm-hmm. Okay.
$1,000 tax credit.
Right.
And my stepdaughter entered college in the fall, so
you lose the education credit when you're filing married separate.
And that's a bad problem.
Big problem. That's $2,500. And with the state of New York, it's around $3,000. So
yeah, when I heard 18,
you should file married joint. I'm not. I don't have a crystal ball, but it looks to me like you should file married joint, and she would file injured spouse.
Okay, now what is the issue again with my stepdaughter?
Yeah, when you're 18 years old, sounds like she gets the college credit, but if you file married filing separate, they strip it away, and you're not allowed to claim the college credit.
And that's $2,500.
And that's huge, Fred. You won't be able to claim the college credit.
Is your stepdaughter on a full scholarship?
No, she has any scholarship. I mean, we actually paid...
All right, well, I'm going to tell you, it's not in your best interest to file separately.
Okay.
Okay?
All right.
Thanks, Fred. Bye-bye.
Yeah. Now, last year before college, it might have been.
Right. But injured spouse, for anyone listening, where you have a spouse that's got delinquent child support, delinquent student loans,
IRS
owes IRS debt, you can still file jointly, but you do an injured spouse form on the federal, a non-obligated spouse on the state. And what they'll do is they'll process it as if it's two separate tax returns, but with all the benefits going to the injured spouse, if you allocate it that way. and the injured spouse, as long as they had income, will still be intact,
Right.
and so you won't lose that $2,500 education credit. So if you haven't done it in the past, or if you did an injured spouse and they processed the return without it, I had somebody call the other day and he said that he had an injured spouse on
Right.
his tax return, and they processed it ignoring it.
Oh, they
And I
made a
said,
mistake.
Oh, but they do that a lot, right?
Yeah.
But you just call and say, hey, I got an injured spouse on here. And they go, oh,
We found it.
Darn tootin' you do. All right, we'll send you the rest of the money back. And so if that's happened to you in the open years, you can get your money back.
That's right. That's
so,
right.
you know, there is a lot of things in the tax law because it's so complicated. And you want to make sure you don't overpay. Let's go back to the phones. And 8030930, 8030930, star 930 on the cell phone. And we'll go to Dale in Buffalo. Hey, Dale.
Hello.
Hi.
The call. Yeah.
Thank you.
Question about I replaced the patio door in my house a couple of years ago. They didn't charge any sales tax, and I was wondering if there's anything I should do on that.
No.
Capital.
When it's a capital improvement, that means they don't have to charge you sales tax. And so there's a capital improvement form that the the person who did the installation would have sent to New York State saying that they don't have to collect sales tax because it's a capital improvement.
And Dale, did you take the energy credit that year when you did the patio door?
No.
Was it
Do
a
you
high
have enough?
efficiency door? Was it, an
Insulated?
Energy Star door, Dale?
I believe so, yeah.
Okay. Do you file a tax return?
Yes.
And what year was that?
I think it was 2 years or 3 years ago.
Okay, those years are still open, and you can get a credit for putting in energy conservation items into your home. So you might want to look at the residential energy credit for that year and amend the return and get your money back.
Okay.
Okay?
Yeah, one other thing, I got a little far out here, but I had someone come in and clean my rugs in the house.
That one doesn't count.
Okay.
All right? All right. So now the residential energy credit is Form 5695. So take a look at that, okay?
95. Thank you.
Thanks, Dale. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Ed in Wheatfield. Hi, Ed. How are you doing?
I'm good. How are you?
I can't complain.
That's great. My wife works out of our home, and she uses her cell phone and our computer.
And in a special room, too, right?
Yes.
Okay.
What can I deduct?
All right.
Let's separate that.
All right. So now, is she doing work? Does she have another place of business, or does she strictly work out of your home?
Strictly out of our home.
Okay. So what's the square footage of the office that she works in?
400 square foot.
And how large is your home?
It is, I believe, 2,000.
All right. So you're going to so 20% of your home is going to qualify for an office and home. So you're going to take whatever the adjusted basis of the house is since you bought it plus any improvements and less the land, and you're going to depreciate that 20% at 20% over 39 years. You get 20% of the mortgage interest, 20% of the property taxes, 20% of the insurance, 20% of the repairs that's done to the home in general, 20% of the water, 20% of all the utilities.
And her cell phone, is that ordinary and necessary? Does she need to use her cell phone to perform her job, Ed?
Oh, yes.
So then
if whatever percentage of the phone that she's using for business is going to be deductible, okay, at whatever percent that ends up to be. And if she did any specific things to the office, like she bought a new desk, if she bought new pictures, if she bought new equipment, that's at 100%. So you do that on a Form 2106, okay, and an 8829.
Or I can just come in and see Esther Goulias.
Well, you could. I mean, you could.
With
it wouldn't hurt my feelings
in a blink of an eye, she'll have it done.
Yeah, I think that's a lot.
And anyway, you're just down the street from us. You're in Wheatfield.
Yes, we are.
Well, if you see that office with all the cars in front that say EG Tax, stop in because we'll take good care of you.
Okay.
All right. Thanks, Ed.
Thank you.
Bye-bye. Okay, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break, and we'll be back with your questions on the other side. All right, so you're just tripping me up. What is that? That's the Bottom Dwarfs Feeders or something? What's the name of that group? I knew it. Great. Well, this is a white day because it's snowing. I'm Esther Golias, the tax lady from EG Tax. Looks like we're not going to get to what a tax bracket is until next week, but we're going to go back to the phones and we're going to talk to Joe in Fredonia. Is it snowing there, Joe?
Yes, it is.
A lot?
No, not too bad.
That's good. Hey, we've really dodged the bullet so far this year, I'll tell you. What can I help you with, sir?
It's manageable for any Western New Yorker.
That's right.
Anyways, well, Esther, I just started listening to your program. My wife and I are separated, not legally. We've filed returns for the whole time we were married, about 20 years.
Okay.
And, things, because we parted ways, we could still file together, but my question is, I may want to file separately.
All right.
We have 3 kids.
Where do the children live, Joe?
Well, one lives in Brooklyn. She's 22.
Mm-hmm. Is she in college?
No, she graduated.
Okay.
And she's working out there. I have a 20-year-old that does not live with me, lives elsewhere, does not live with mom. And
Is that child in college?
Yes.
Okay, go on.
And I have a 16-year-old that lives with me when I'm at home because I travel with my work, and lives with mom when I'm not at home.
All right, so who would the custodial parent be for the 16-year-old?
Well, like I say, lives with me when I'm at home.
Okay,
school
all right,
bills,
so where would the doctor bill come? Where would the report card come? Whose address?
Yeah, to my residence.
You're all right. So you're saying that this child lives with you more than with mom, correct?
I would say half the time.
Okay. Well, there can't be absolute half the time. There has to be somebody that's living more with one than the other.
Well, that's really not defined because.
All right. So let me just tell you the law, and then I'll let you guys fight it out. Okay. So here's the thing: how long have you and your wife not lived together, Joe?
It's been over a year.
All right. So if a child lives in your home and you have been out of the house at least for the last 6 months, okay, and you have a dependent child that is living in your home, then for tax purposes you're considered head of the household, and you wouldn't be married filing a joint return. You'd be head of the household. So you'd be able to, if you are able to claim that child because you can prove that the child, that you were the custodial parent, then you get to file head of the household. Now your wife, if the child that's in college comes back to your wife's house, if your wife is the custodial parent of the child in college, then your wife would be head of the household for her household.
But
if she's maintaining over 50% of the cost
But
of the
if
house.
that wasn't the case, your wife would file married filing separate.
Mm-hmm.
And so where that person goes to college, it's called a temporary assignment, and one of you should probably claim that 20-year-old too.
Right, and the education expenses. But here's the important thing is you want to make sure you document as best as you can where the kids go, when they did, because this is a gigantic tax break for you if you're able to file head of the household.
Okay.
Okay?
Yeah, well, he lives in an apartment.
But you see, a child that lives in an apartment in college is still considered to be a temporary absence unless the child is self-sufficient and his support is not being provided between you and mom.
And that's pretty much the case.
Okay, well then we're going to let that go. But the 16-year-old, you have to figure out who is the custodial parent. Who does the child live with the preponderance of the time? Quite frankly, if the two of you can't agree, then both of you lose and you both file married separate.
But my gosh, the person who is not the head of household is going to file married filing separate. So you guys might want to have a meeting of the minds. Another
Right.
good form is
Or
the
file jointly.
Yeah, the jointly, and an allocation of refund form. You guys do a form 8888, and you can take part of your refund and put it in your account, and part of the refund and put it in her account.
Right.
Okay, well, I mean, I guess here's where I want to go with that, because she runs her own business through her home, and while she grosses a certain amount of money, which is less than what I earn. I don't, and she owes the IRS right now.
Okay, so you'd file an injured spouse too, but on top of everything, Joe, approximately how much do you make?
About $81,000.
Okay, so he's not going to get the earned income credit. So I mean, I would put a pencil to it and see who the child comes to live with more, whose name and address is on the doctor's report, whose name and address is on the school records, and if you are the preponderance of the custodial parent, then you would file head of the household.
And then be
claim
careful.
child
The
as
first
dependent.
to the well, if you're legally allowed to, is who's going to be able to claim the child. And so if she goes and does it first, then you're going to have trouble e-filing. You could still do it paper,
Right.
but electronic filing will be off the table for you.
Okay.
Okay.
Thanks, Joe. If you need help, give us a jingle. Bye-bye. That happens a lot.
A lot. Does.
What people don't know is that even though you're still legally married, if you haven't been living together and you are maintaining the household for a child that you're dependent, you get to file not married separate, but head of the household. And that's a big loophole. Let's
really
go
is.
to Mike. Hey, Mike, how can we help you? Hey, Mike.
Yes,
Yes, sir.
I grossed about $11,000 last year.
Okay.
Will I get all my income tax back that they took out, or?
Is that from wages, Mike?
Yes. Well, wages and a gambling one.
Wages or gambling? How much is the wages?
About 6.
How old are you, Mike?
67.
Okay. Had you been under the age of 65, you would have gotten an earned income credit. Are you single or married?
Single.
Okay. So your total income is about $11,000, right?
Yes.
Then you're going to get back all the money they took out.
And the state and the federal?
Yes. Mm-hmm.
Thank you very much.
You're welcome, Mike. Bye-bye. Okay, let's go to Chuck. Hey, Chuck, how can we help you? Hello, Mr. Chuck. Hi, Chuck.
Hi.
How can I help you, sir?
Okay. I've got an interesting one. My father and my family became a victim of this recent heroin epidemic.
Oh, I know. It's terrible. It is.
So in 2015, I ended up doing a single head of household. My 23-year-old son at the time ended up barely working at all. And I claimed him as a dependent.
Right.
Last year, on the second week of January, finally got him into a detox and a rehab. We had to go to Florida because New York State wouldn't. They had some bad laws then that they've since changed. So we got him in this detox in Florida. They had to keep him for a couple of months of rehab because they said his problem was bad. 1 month wasn't enough, so they kept him for about 10 weeks,
Right.
So at that done, they recommended he not return because his girlfriend was also living with us and she had to move out. So anyways, what ended up happening was they recommended he not return because, the love of...
Because of the bad situation.
Right. So they recommended a halfway house, a really good one and everything, and that was like $700 or $800 a month. And they insisted that he had to do that, his life.
Yeah, I understand.
So he's not working, so he gets into this halfway house, and so anyways, he's down there for probably the first 6 months. It was pretty, like financially, it was a mess because it took him forever to get a small job, and so he had to lean on me. I had to give him one of the credit cards in his name, and which was fine, And but anyways, he got a job, maybe a good job, and he's doing well. He's got over a year's sobriety now. He's doing well.
Oh, that's great.
And we were just talking, so he's going to file his taxes. He's got like $600 coming back, and I said, well, I said, since you've been in rehabs and detoxes in a halfway house for the last whole year, I said, and I bore a lot of the cost,
All right, well, let me ask you this because I'm running out of time. Did you pay the medical bills?
He used my...
were you paying the detox? Were you paying the halfway house? Were you paying for all that stuff?
Yes, I was.
All right, how much did he make, Chuck, last year, approximately?
I'm not sure exactly.
Give me a close.
Oh, he might have made over the $4,000.
Okay. If he made less than the 40-50, okay, then you can claim him. All right. But if he made more than that and you paid his medical bills, you can still take that as a itemized deduction on your return. Because if you paid medical bills for somebody that could have been your dependent, you can take them on your return.
The medical bills.
The medical bills.
So that's what I'm wondering. I was wondering about the medical bills.
Yes. And I ran out of time, Chuck. If you want to talk to me, I'm going back to the office, 632-7886. Until next week, I'm Esther Gulius, the tax lady from EG Tax. We hope you give us a try. We sure want to be in your corner. Thanks for listening. Bye-bye.